Welcome to TradeTheMBI.com. This is John. This report is for the 2nd of June, and breaking out to new highs. And this is what we were talking about. We had reached the little bit of weakness. It filled itself out within a day as we got the complete reset of the steel and short-term, mid-term buyers, as well as even long-term buyers started popping up. And this was the beginning of month play. Obviously, it really helped that the Paris Climate Agreement overdone. And once that was mentioned, again, this is that regulation pop that we're talking about that really has been the impetus, because it appears that we're going to get like zero activity out of the Congress, which again is not a bad thing. It actually in the past has been very productive for business to not have anything moving, because then you have no new regulations, you have no new impediments. Usually government is the biggest impediment to business growth. We're also seeing some strong numbers coming out of employment and things. So these are all going to start to propel stuff, and a little bit overbought with that move, but needless to say, we could see that we were having this reset. I mean, it's the beginning of the month. We know that new fund money is going to come in, so that would be the time where we would expect a significant push. And again, now we're getting very close to that full target that we've been talking about for at least I've been talking about for quite some time. Likewise, NASDAQ continuing its press. Doesn't mean that we aren't going to see these reactions. And again, like, this is exactly what I was talking about from months ago. Once the election was over, this effect from the early 90s where you finally had a resurgence in the ability of the economy to move forward. Euro right in line with our expectations. It's very interesting too. You have the ECB with a massive balance sheet. I think it just overtook the Fed's balance sheet for the first time ever. I don't even know what that should mean, given that the EU is nowhere near the size of America, but crazy to have the euro this high with that much liquidity floating around in the EU. And surprisingly, even with the market rally and higher jobs and everything, the expectation for rising prices and that should be real, and yet treasuries continue to climb. And oil is going to be stuck down in this range. This is just not a super duper, but it was clear that the short came through and started to see a fade on it. Just not a whole lot of downside. And of course, gold, no surprise for this, definitely going to start rising, particularly if you start to see it translate into actual GDP numbers, because a recognizing of the economy picking up is really what everyone's looking at, and that, I think, is the only thing that's going to turn oil around. Serious activity in the economy would actually be a resurgence for OPEC. Right now, it's the low growth worldwide policy that's really inhibiting OPEC's ability to control price. So that's where things currently are. And this is just a beautiful chart from this. We had the buys. Let me just shrink it just a little bit here. Going back from the other day, crystal clean, and then boom, cyan moves below red just before we had the major breakout and has stayed there all the way. Complete reset of the steel, which means there's plenty of liquidity popping into this setup. Even when we were rising above the plus 13s, huge indication that there was still plenty of new capability to buy into it, and staying above 7.5 for the red and green. That's pretty impressive from a strength standpoint. We're starting to see a little softness here into the pre-market, finally getting a situation where we may see cyan take over for the first time. But what a beautiful run, no question about it. Piece of cake to follow this one from the last few days. I think it actually began from that Friday chart, but it'd go all the way back before the holiday, and we ended up with a little dip. We started getting that buy resurgence, and sure enough, took off from there. It's very effective and easy when you get this kind of a clean. We had a few days of chop, which everyone was complaining, and like I mentioned in the video report from last week, that you needed to be ready for the moves as they started to take place, because when they happened, they were going to be quick, and if you hesitated, you'd miss it. And if you hesitated on going with the turns on this it makes things difficult. You just have to go with what the readings are and not even look back, because if you do, you only outthink yourself, and it's just not effective. I mean, sometimes we get a bias when the market's been going to too many highs. Oh, it can't keep going. Yes, it can. It can go for a lot further than some people. And I love the logic arguments. They're all true, and everything can be true, and you can still get the wrong outcome if you don't follow what the readings are telling you, because they're the ones that can see it. Our prejudice get involved when we start thinking about all the reasons why something shouldn't be. And then it's that whole logic too of a little bit of gaming where, the idea is that, if red's been coming up 16 times, I'm going to have to vote, for black. No, red can come 30 times. It can happen. So that's why I just say stick with what you see versus where your mind thinks that things should go. And I think you'll be far better off. As always, though, trade well. I'll keep posting these on Skype, and that is relevant. This was just nothing. It was just too easy of just straight up. As always, trade well.